Hello traders, welcome to your daily market update for Friday the 5th of June. It's non-farm payroll Friday and the market will be focused on the non-farm payrolls. We have some Euro GDP on the docket in the European session, and other than that the session is going to be quite subdued, I feel, and the market is going to be looking for the non-farm payrolls for indication of the next move for the US dollar, and we also need to keep an eye on some Canadian data. Before I get into that, let's go over yesterday's market moves. We've seen the euro grind higher on the back of some volatile bond movements. The bond market is continuing to rally in yields, and that definitely pulled up the euro and the pound throughout the European session. It's quite interesting, though, to see that the euro did close the day higher because the talks between Greece and the euro are getting messy. Once again, no surprise, but we did get Greece officials come out and say they will not accept such extreme proposals, and the only proposal is the Greek one that is really acceptable to them. So really, the IMF has been told by Greece, and it seems that two steps forward, one step back, and we're back to restructuring a new deal. They also mentioned that they won't be making this week's payment. So they have asked to roll that over and bundle it into a next month's payment, and we will wait and see what the IMF's report is, but it doesn't look like the progress that everybody was thinking was going to happen is coming to fruition, and the euro should remain under pressure throughout the European session, I feel, on the back of this data. So the Greece situation is going to continue to weigh on the euro, and the pound is going to continue to be weighed on from the recent weak data. So moving forward on to today's session, as I mentioned, we do have GDP out of Europe, and that will ultimately control the data and the price action coming out of Europe, but really the market will probably focus on the news wires, as the market is going to continue to focus on the Greece comments, and I'm sure there's going to be plenty more speculation back and forth. So keep an eye on that. And as we move into the US session, we have average hourly earnings and non-farm payrolls and participation rate, the unemployment rate, really key for this session. So will the non-farm payrolls push the US dollar versus the Japanese yen above 125? Well, the dollar held up well in yesterday's session despite some weaker than expected data. So it is providing some good signs. And the data suggests recently that the jobs will be quite firm. But really the key figure that I feel is going to be the wage growth, as the Fed has already stated that they want to see wage growth continue. So we're going to have to continue. We're going to have to focus on the average earnings, hourly earnings, and weekly earnings. Make sure that they're ticking up, and of course the non-farm payroll needs to be around the 225. If it is a great number, we hope that the average hourly earnings is also solid for the US dollar to continue to rally. It wouldn't hurt for the unemployment rate to drop, but we are getting down to pretty historical lows, and it's going to be hard for it to squeeze lower and lower as the economy improves. But it definitely would help if we did see that, but it won't be end of the world if it just comes in at 5.4. So for me, focusing on the non-farm payroll being solid around 225 or greater, and the average hourly earnings ticking up and showing signs of improvement. The Canadian data is coming out at the same time, and there's also some indications that the employment data might come out good, as the PMI data that came out yesterday, the labour component was strong. So there is a chance that the Canadian employment data could come in solid, and we do have some volatility coming out of the OPEC meeting today. So the US versus the CAD is going to be quite a wild ride potentially, as OPEC discuss the future. We have US non-farm payrolls, and we also have some Canadian data. So all good things happen in threes, and we will see if we get a breakout of the current range that we've seen from the US versus the CAD, a little consolidation we've had recently. And that will cap off the week. So keep an eye out for the non-farm payrolls. It may be a quiet European session, but it will be trading on the back of speculation from the Greece situation. Let's go and have a look at the US dollar. You can see that it did bounce towards the end of the session and made a pretty nice little recovery, producing a daily spinning top candle. We are somewhat in a flag formation here, and we really need to see a big strong breakout above 197 to really convince me that we're going to push through the 100 sustainably in the short term. So the non-farm payroll figure is going to be important. If it does miss, we could continue lower down into the bottom range of this flag. So keep an eye on the US dollar index, as that will be important for the sessions moving forward. Having a look at the charts, you can see here that the US dollar versus the New Zealand dollar versus the US dollar tested and flamed out. A historical support level has now become resistance, and we've seen 2 days of falling. We're getting a little bit of a bounce now, but we'll see if the non-farm payroll figures do come in supportive. I'm sure that this old historic support becoming resistance will hold up, and the New Zealand dollar will be sold off quite heavily. If we go out to a weekly chart and I zoom out for you, you can see that there's plenty of room to the downside here before we actually find some major support levels, which would come in at 66 cents. The Australian dollar is in a very similar camp, except we haven't taken out any lows recently, and these lows here continue to hold up, but with weak trade balance figures that came in, we did see a sell-off on the Aussie dollar, and it has underperformed, as you can see there. We are getting a falling star candle, candle formation, which is very strong candle formation, suggesting that we are going to move lower, and we possibly could get that on the back of strong non-farm payrolls. And if it is strong enough and we take out these lows, the Australian dollar is going to continue to remain under extreme weakness, and there's plenty of downside room for it to continue to fall. The euro versus the US did have a flame out yesterday, as I mentioned, on the back of the Greek fears or the Greek failed discussions. So we did get another rally that was very impressive, coming up towards the $1.14.5, and we've pulled back quite considerably. So this will be a key reversal day for the traders that trade with me, and we will be looking for moves to the downside, especially if the momentum continues throughout the European session on the back of the breakdown of discussions and the fact that Greece won't be making the payment that's due today. And of course, if the non-farm payrolls come in strong as well, then we could see some moves lower. Right now, we just need to see a breakdown of this major support before we can really get excited about the pair unwinding in a big way. The euro versus the US, the Great British Pound versus the US that we're on now is also flamed out here. We did have a series of bounces after we had 7 consecutive days of losses, and then we've had a few days of bounces, and we flamed out a little bit on the pound as well, which it leads me to believe that we could be looking for the downside. And if you look closely, we could potentially be seeing a head and shoulders pattern here with the head and the 2 shoulders forming either side, suggesting that we could get moves to the downside, and that's possible. It's going to be up to the non-farm payrolls to provide indication of whether the momentum is going to continue to the downside, and next week we could be continuing to trade the trend lower. US dollar versus the Canadian dollar, as I mentioned, we are here on the daily chart. It has consolidated for a couple of days after what was an impressive bounce. So we did get some pullbacks on the US dollar as there were fears of not raising rates. But you can notice here that the US dollar versus the Canadian dollar, also the US dollar versus the Japanese yen, didn't pull back. It really wants to hold up there. And we will see what comes on tonight. And if we do get a strong non-farm payroll and the OPEC meeting and everything goes towards plan, this pair could get quite volatile, and we could see a bounce, especially if OPEC send oil drastically lower. I think that this pair could be in for a wild ride. Of course, it could also event to nothing, but we have to keep in mind that the data's there, and there's certainly a potential for it. I'm really looking for a breakout of either side of the current highs and the current lows that you can see form there, and a breakout would be a good indication that we're going to continue to move higher. Likewise, you can see that we did get this this breakout of this consolidation pattern, which was a triangle, and we broke out to the upside. It's rallied and stalled, and we can notice, just like the US dollar versus the Canadian dollar, we did get a pullback, but there was a floor put straight underneath it here at $1.23.7, and we continue to bounce off it, and it wants to hold up. I think a break above the highs is definitely going to give everyone the indication that the next stop could be 130. Non-farm payrolls will be a key to this particular trade. If it does disappoint, we could get a breakdown. And if we do get a breakdown, there is a chance that we could get a pretty sizable pullback to the old historical high, or potentially, if things really get worrying, we could pull back to 121 at least. All right, well, that's it from me today. Stay safe out there. If you're not normally trading non-farm payrolls, it is a very risky trading event, and I suggest you stay out and just keep an eye on the data and the price action. You can learn a little bit from it. I'll be back again next week, so until then, trade well and have a great weekend.